Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. With me is Shail Bhatnagar. Well, we've seen that yesterday the Nifty and the Sensex extended their two-day losing streak on Wednesday, reflecting a broader sell-off that was seen across the global markets too. Remember that Nifty continues to be stuck in a range of 24,900 on the downside and 25,200 on the upside. It was the weak global handover coupled with the index own struggles at the higher levels that took the Nifty back below the key levels of 25,000 yet again. The Nifty Bank did make an attempt to surpass 52,000 on the upside but failed to do so on its weekly expiry. Now, for today, what might just end up saving the day on Thursday would be positive global handover that we have got. It is the expiry session, but remember for the Nifty and Reliance Industries, the heaviest weighted counter will be in focus because it's announced the record date for its 1:1 bonus issue of shares after getting shareholder approval by a majority. So these are the key things that we really need to look at. And of course, earnings momentum will continue to drive the sentiment on specific stocks and sectors for the markets as well. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. It's Thursday and therefore the weekly expiry of the Nifty, and for the last 5 trading sessions we've seen it's a death by 1,000 cuts, slow but sure downtick that you are seeing on the Nifty. It's unable to breach past 25,200, and yesterday 25,000 was surrendered by the bulls to the bears. Now it seems that it's going to test the bottom of 24,700 that was made last week, and once that bottom is tested, if it slips below, then obviously more pain ahead, but it's the test possibly that you might see happening in a day or two. The good point is that the slide is slow but certain. So this is a correction in which only option writers are making money, in a sense that once the index hits 25,100, 25,200, you will see heavy call writing happening. And then yesterday you saw the breakdown of 25,000 and the index slipped below that. Now let us also examine what are the other fears that are there in the market. Crude oil prices that had fallen by about 4 odd sessions when they were unable to break past 200-day DMA may firm up further. So the crude oil trade that we were seeing in terms of a rise in prices on HPCL, BPCL, IOC, which are the oil marketing companies, and of course paint companies such as Asian Paints, Kansai, Akzo Nobel, Indigo Paints. That trade seems to have sort of run its course, and you might just see profit booking being encountered on the counters that I mentioned. The other interesting theme is that gold prices have begun their upward climb. Therefore, the following stocks will again come back into focus on the long side. We've been tracking Muthoot Finance and Manappuram Finance from the gold NBFC space. Once gold prices rises, their inventories start getting valued higher and they are able to lend more. So that's a sentimental uptick that happens on Muthoot and Manappuram. Keep an eye out on that. Of course, all the gold jewelers, starting with Senco, starting with Thangamile, starting with TBZ, will also be in focus. Remember, in the 2 weeks gone by, you've seen massive momentum coming into Senco, so keep an eye out on that one. The other issue that is going to be reacted in the market is the earnings. Let's look at the chart of Bajaj Auto. This is the top performing two-wheeler stock in the 2024, up about 140%. Bajaj Auto announced a very strong show as far as the second quarter profit is concerned, 9.2% higher, 2,005 crores. The estimate was above 2,200 crores, but there is also a 200 crore rupee tax, extra tax that Bajaj Auto has given. So in line with estimates, margin has improved in Bajaj Auto, and of course sales are higher by 24% in the quarter gone by to about 13,128 crores. The other counter to pay attention to is LTTS, that's L&T Technology Services, where you've seen a 4.5% rise in quarter on quarter in revenue at about 2573 crores and a 2% uptick Q on Q in profit after tax at about 300 20 crore rupees. These are the two stocks that I am looking at as far as earnings are concerned. Equally stellar show by Emphasis, and it's going to be a very, very busy day for Sakshi and me when it comes to totaling the second quarter performance. You have four index companies from the Nifty reporting earnings, two tech giants, Infosys and Wipro, followed by Axis Bank and of course Nestle. And equally big four from the F&O pack, which is Havells, Polycab, Tata Chemicals and Tata Communications. But ladies and gentlemen, bear in mind that now the battle shifts to 24,900 between the bulls and the bears. The bears are seen to be in strength as far as the Lal Street is concerned. As one of our experts on the show was mentioning, if L&T and Reliance and a couple of other stocks are below 200 DMA, you don't expect the Nifty to make a renewed thrust towards the sky. You expect that the lower bottom would be tested, which is 24,700. Let's hope that the test is at a higher level and then you again resume the upward climb. But so far, none of the earnings that have come into the Nifty have given any hope for any such up move. So a strong support as far as monthly options chain is concerned on 24,900, 24,800, but an equally strong resistance is now getting built by call writers on 25,200, 25,100 and 25,000. So range bound trade on the Nifty. Let's hope that the test of 24,700 is at about 24,950, 24,900 or 24,850. Sakshi, that's the thought that I have in mind. What are the cues that are coming in from Wall Street and what have our foreign friends done?
Shail, we've actually seen that the US benchmark indices did end higher overnight, so that's a positive overhang that we have from the markets overseas. Dow Jones especially, it hit a fresh record high as well. We also did see some earnings come in from the banks that led to this momentum in the US markets. Although some of the IT stocks did slip, but the Nasdaq managed to end above 0.3% higher in trade at 18,367. The S&P 500 also ended about 0.5% higher in trade. Following this positive handover, we've also seen Asian markets trade mix in the early opening trading session. It was the Nikkei, when we see that was inching higher in the early trading session, but it's now slipped about 0.5%. Kospi is up by about 0.2% higher in trade. Hang Seng is up by 0.8%. We also have the Shanghai Composite that's also higher in trade as of now. When we talk about the GIFT Nifty trends, they are indicating a muted start for the Indian markets today. The GIFT Nifty is pointing to a start at 25,054, flattish with a negative bias as of now. When we look at the Brent crude levels, they're trading about 0.6% higher at $74.67 a barrel. That's something that we need to continue to keep an eye out on. Foreign portfolio investors have continued their selling streak in the Indian equities for the 13th straight session. On Wednesday, they've offloaded stocks worth about 3,435 odd crore rupees. In contrast, what we've seen is that the domestic institutional investors, what they've done is they have purchased the stocks worth about 2,256 odd crore rupees as well. Now, of course, apart from this, we will be keeping a whole host of eye on the key stocks that reported their earnings post the market hours yesterday and the key news flows that have been impacting some stocks. So Bajaj Auto is something that we'll be looking at. Standalone YOY numbers show that the revenue was up 21.8% at 13,127 crores for the company. In line with the estimates, EBITDA was up 24.3% to 2,653 crores. We've also seen the margins also improve by 41 basis points to 20.2%, again in line with estimates. The net profit was up by 9.2% to 2,005 odd crore rupees for the company. L&T Technologies in Q2 of FY25 has reported consolidated sequential numbers wherein revenue grew by 4.5% to 2,573 crores. What we've also seen is that the EBIT improved just marginally by 1% or to 388 odd crore rupees as well. Margins, however, came down by 50 basis points at 15.1%, and that was a bit of disappointment. The net profit improved by 1.9% to 320 odd crore rupees as well. CRISIL on a consolidated YOY numbers has come out with a total income of growth of 7.9% at 833 crore rupees. The net profit is up by 12.9% as well. And what we've also seen is that the company has declared a dividend of 15 rupees per share as well. So that will be also in focus. Reliance Industries, as I mentioned earlier, the company will be in focus. The company has announced October 28th. That's the record date for its 1:1 bonus issue. Stock could be in focus because of that. GMR Airports Infra will be in focus. The company's passenger traffic for September has grown by 9% year on year. And Ultratech Cement will be in focus. The company has commissioned an additional 1.2 million tons per annum grinding capacity at Arokum plant in Tamil Nadu. BKG Foods will be in focus. The company has acquired a 53% stake in Hazelnut Factory Food Products for 131 odd crore rupees as well. Oberoi Realty will be in focus. The company has approved the issuance of NCDs for an aggregate amount of 1,500 crores. Oriana Power will also be in focus. The company has received a 75 megawatt solar power plant order for 375 odd crore rupees. Capri Global, I'm keeping an eye out on. The company has said that they will be raising 1,000 crores via NCDs on October 29. Some railway counters will be in focus, like RVNL has emerged as the lowest bidder for a project worth 270 crores. Railtel will be in focus again. The company was already in momentum for the last two sessions. The company has received 3 orders worth 87.2 crores. Ircon International, the company has signed an MOU with Patel Engineering for infra projects in India and overseas. So these 3 counters from the railway pack will be in focus. From real estate, Kolte Patil will be in focus. The company in its second quarter business update has reported a sales uptick of 22% at 770 crores. Collections have grown by 16% year on year to 550 crore rupees as well. Aditya Birla Fashion Retail will be in focus. The company's arm has made an additional investment of 75 crores in Wrong, which is also a Virat Kohli backed company, increasing their stake from 17.1% to 32.8% as well. And of course, in the IPO space, we will continue to watch out for Hyundai Motor India. The third day public issue has been subscribed to 0.4 times on day 2, and there were bids that have led by reserved for employees. 1.3 times is what that has got fully subscribed. Qualified institutional investors have subscribed about 0.5 times, retail investors about 0.4 times, and non-institutional investors about 0.2 times as of now. We'll have to see how it sails through the last day in trade as well. So, Shail, these are the key stocks that I'm looking at.
8:46, ladies and gentlemen. We are awaiting the presence of Mr. Devin Choksi, Managing Director, DR Choksi FinServ, to join us. And of course, we will also be looking out for several other stocks in the F&O space, which have given a stellar move as far as markets are concerned. If you look at how the weekly change has come in, Bajaj Finance on the Nifty is down 4.8%. You have a very, very strong downtick that has happened into Maruti, 4% lower. You have M&M 4% lower, and of course Cipla down 3.6%. The reason why I mention these downticks is that you will now see swing trades on the upside getting ready as far as prices are concerned, because momentum on the long side is extremely low. It is always sensible not to chase breakouts because they are met with selling pressure, but to chase dips, which essentially means stocks that have corrected for 3-4 days, 5 days, have strength and are there because of a tailwind on the long side, and that's the auto space. Therefore, we will be looking at M&M, we will be looking at Maruti to find an entry point, maybe today, maybe tomorrow, for a nice swing trade in the making. That is a better strategy instead of trying to look at breakouts, which are few and far between. Devin Bhai is with us. A very good morning to you, Devin Bhai, and festive greetings. We get you on the show at a time when India's largest offering to the public, whether it through its OFS or IPO, is open, Hyundai, and of course another big ticket item in the form of Vari Energy is about to begin its IPO sale. How do you see sentiment on Dadal Street given these two mega IPOs coming in? Do you think money is moving away from secondary into primary markets?
Yeah, good morning, Shail, and season's greetings, festive greetings to you as well. Well, I think 50,000 crores worth of amount is getting collected by way of three issues. One would be, of course, I think Hyundai is the largest one, NTPC Green following thereafter, and Vari, of course, I think which has already indicated they are entering the market. With this kind of money getting collected, and particularly from Hyundai, where the money is getting collected by way of OFS route, the promoters are taking out the money. I think that's where probably the market is slightly confused as I see it at this point of time. Whether to fully subscribe to the IPOs or whether to, I think, stay with the secondary market. The challenge out there with the secondary market, as I see currently, and I'll talk about IPO in a while. Currently, the challenge out here is the result season has started. People are waiting for the indications on the growth, and at the same time, price adjustments are happening from earlier rally to the current rationalization of price along with the growth that the companies are forecasting. I believe that I think that process is on, and as I may have indicated a little earlier as well, that I see a result season as a lull kind of a period in the market. Till the time I think the result season gets over, probably you are not going to see market moving in a greater range. It may remain sideways, maybe 24,200 on the Nifty and downside, and maybe I think 25,200 on the upside. This is a range in which I think the Nifty is expected to play around. Coming to the IPO, I believe that Hyundai in particular is more of an institution grade stock than a retail one. Because I think most of the institutions who are looking at putting in a sizable amount of money, they can't get better opportunity than this when the promoter himself is selling and giving you the entry into the company. So probably I think they would like to buy a significantly larger chunk, which some of the anchor investors have already shown the appetite for. And secondly, I believe that I think there is a space available in the portfolio of most of the funds where they would like to have one more OEM into their portfolio after Tata Motors and Maruti. In particular, I think these two passenger car vehicle companies. So in my report, I think the opportunity is there as far as institutional investing is concerned. The retail, the flippers who are basically like to take the advantage of the liquidity related rally in the market, they may not get the advantage out here in July. That is very clear and obvious. So yes, I think the critical perspective, I don't think that the company per se is bad, but I think it's more of a category which is institutional category of investor belongs to, as far as Hyundai is concerned.
Very good morning to you, Devin sir. Good to be speaking to you. I also want to begin by understanding more about Reliance Industries. We've just seen the earnings come through. Yesterday, the announcement came in for 1:1 bonus issue, the record date on October 28. But I want to understand from you, last 3 months, the stock is already faltered about 15-16% odd. Right from the time in the AGM this bonus announcement was made, there was not too much enthusiasm into the stock. The earnings have been largely lackluster, barring Jio's outperformance. How are you looking at Reliance Industries in the medium term period, and what would you advise investors who are looking at this opportunity to get into the stock for the bonus issue as well?
So good morning to you, Sakshi, and I think good detail on I think you are asking. I'll try to summarize in this manner that on one side, this company has already created a base of 1,40,000, 1,50,000 crore worth of EBITDA in a 12-month period. And they're trying to grow this particular business across all verticals, I think with 15 to 20% rate of growth. Of course, oil and gas vertical, I think, is now relatively more steady as compared to oil to gas segment or O2C, oil to chemical segment. Uh, in that in that situation, I would think that the larger challenge has been behind now, particularly related to fetching the better realization from the global market for the refining products. That continued was, I think, troublesome period. I believe that I think stability is already there in the GRM, and I reading says that I think the numbers are likely to be better in the current quarter as far as O2C business is concerned. The consumer facing businesses of retail and geo platforms, digital services, I think they are the ones who are creating a significant amount of more confidence in the minds of investors. Both put together have earned somewhere around close to 12,000 crores worth of EBITDA in this particular quarter. So on a yearly basis, I think they are talking about more than 50,000 crore worth of EBITDA coming in from this particular consumer-facing business alone. Along with, I think, the balanced amount of money, I think, earned by the industrial businesses which we talked about. So, in my viewpoint, I think the company looks pretty stable on the digital front. They are actually going to, are likely to probably grow significantly larger as they rolled out the air fiber, geo air fiber. They have also basically started creating the verticals in the agri tech, in the edu tech, health tech, and e-commerce, media tech, etc. So therein probably I think there are AI-based applications are also platforms are also being offered over there for the bulk users. In my viewpoint, I think this is going to be a game changer. It's going to probably drive the growth in a range of around 18 to 20% on the EBITDA side. So we believe that I think the company is reasonably set for Geo platform. And the retail part also, I believe that I think except fashion and styling segment, rest of the verticals have actually played role very well. And with Geo Finance integrated with the retail, my take is that I think the retail could possibly show slightly or better performance. Also, the fact that I think around 8.8% is the EBITDA margin, which was last year somewhere around 7.5%. In my viewpoint, I think no single company in the world today is producing this kind of EBITDA which they are producing in the retail segment, largely thanks to their completely integrated model along with the payment and at the same time, I think their own brands. So maybe I would think that I think one would remain more confident about the consumer facing business and wait for the turn to come for some of the industrial businesses, along with I think the launch of renewable segment of business. So overall, view remains positive. It's a deep value investment, so I think one will have to buy and I think stay invested for 3 to 5 years.
Absolutely. We've seen 3200 on the screen as far as Reliance was concerned when the AGM announced a 1:1 split, bonus actually. And of course, you have the stock now at 2700. So that's a 500 rupee margin of safety. And typically, we have seen stocks run up to the record date when you get this kind of an announcement that the bonus will be effective for people whose names will be at that point of time. So Sakshi, from the date that you mentioned till today, you will see an uptick in Reliance's price for reasons that Devan Bhai has mentioned, and of course the very simple reason that if you want a 1:1 bonus, you have to get your name registered into the record closure list. Devan Bhai, how are you observing this very sharp rise in AMC prices and a return of sentiment in a lot of broker stocks? How I so wish KR Choksi or DR Choksi stocks and securities were listed. I am sure you would have also enjoyed a very vast expansion of wealth. But in particular, how are you looking at this value discovery of price in asset management companies, and what would be your top pick in the AMC space and in the broker space?
Yeah, I think it's a pertinent one, Shail, and I think from a perspective of looking at the market wealth, today we are about 5.5 trillion. 10 years back we were about 2 trillion. 10 years after we are likely to be 12 trillion. So if you see in a 20-year span, I think a 2 trillion is becoming 12 trillion. So 6 times growth in the market wealth. Now the market intermediaries, be it stock exchange, be it depository, be it brokers, be it AMC companies, insurance companies, all of these players are actually I think thriving on this particular market capitalization of the country. And in my viewpoint, I think this is a big picture which is there in front of us for next 10 years. The mutual fund part business is per se, I think, have been doing an extremely strong registration of new customers. In fact, 40 to 43 lakhs new demat accounts are being opened every single month, which is giving you a run rate of around close to 5 crores account per year. I guess I think this is where probably you are seeing the larger amount of participation including in the AMC business, including in the brokerage business, who are providing this particular facility to the customers. This is not going to slow down. This is not going to come down. I think it's a habit which one has already got into. It's more of an FMCG kind of habit, I think, that you have in the investment business. I think when you have this kind of products to move into. In my viewpoint, I think the AMC business remains absolutely strong with likes of SBI, likes of HDFC, and of course Nippon, among others. They look really, I think, pretty looking businesses. Their EBITDAs, the revenue, I think if you look at it, 75% is the margin level. I believe that I think the companies are relatively more stronger than whether to buy upfront or whether to buy and I think wait for 3 years to get your appreciation. I think the latter would be true in case of AMC businesses. In case of brokerage business too, I think the era of discount brokerage probably is over. In my viewpoint, I think the era of the full-scale brokerage business, I think, is arrived at, wherein the companies which are equipped to provide complete services to the investor, they would be the ones who would be sought after and they would be charging price. So obviously, I think the times are better. They've done fabulous job by way of acquiring the customer. Now it is time to write the benefit out of this particular thing. So we remain distinctly positive, though we don't have much recommendations at this point of time on brokerage companies.
Okay, I think it's the pre-open rates have already come in. 225 points of a cut on the Nifty. 24,744 is what you see on the Nifty. That's much weaker than what the gift Nifty trends were indicating, which were pointing out to a flattish opening. I hope this improves for the better. You are seeing almost a 0.9% kind of a cut on the Nifty as of now. Let's look at how Reliance Industries is moving in the pre-opening trade. That is the first stock that we will be checking. Prices have not yet come in. Let's also look at some of the heavyweight counters. See Infosys, for instance, Bajaj Auto after the earnings. If that has started to move too, there are several earnings from the IT pack. Wipro, Infosys will be in focus again. So let's look at how the IT pack is moving. You can actually already see some improvement on the Nifty, 24,812 now, almost 160 points of a dip, 1.2% higher ahead of earnings for Infosys. 1944 is the current level for Infosys as well. Let's pull up even Wipro, TCS to see TCS is still softer, about 0.5% of a lower in trade. But let's also pull up the banking counters. Remember yesterday, HDFC Bank started to pull up too. Some of the private banks like ICICI have been trying to pull up the markets, but there's a sharp fall in the pre-open trade today. 1627 odd, a 4.2% downtick is what is being indicated in the pre-open trade for HDFC Bank. Let's pull up ICICI Bank also to see how that one is also indicating. Yes, another 4% downtick on ICICI Bank as well. 1191 odd levels that can be seen. So the banking counters seem to be on the back foot. Let's look at the oil and gas counters. They have been holding the ground so far in the markets in this week so far. So let's look at BPCL. I think that has been BPCL, HPCL both have been holding up in this recent crude oil prices dip kind of a fueled rally. Very softish opening, 349 odd levels, about a 0.2% of a downtick. And let's also pull up HPCL that has been stock-wise a better performer. So about 0.8% of a downtick. So some profits being shaved off in the pre-opening trade. Thankfully, we are back above 24,900 mark now on the Nifty. It's a 65, no, it's a now a 44-point downtick. So just like I said, it's improving for the better. Let's hope that the opening even improves from here on as well. Getting back to Devinsa. Devinsa, another space, of course, the earnings season has kick-started. Some bit on a mixed note. I wanted to understand from you, has anything stood out for you so far? What are your key expectations from the earnings season that is to follow in terms of sectoral outperformers and underperformers where we can actually see?
Well, I think more importantly, this particular quarter has seen, I think, some amount of challenges, particularly because of the high base effect of the previous year. The growth is continuing, but on a previous year's larger growth base, I would think that I think this is becoming a little muted one. That is where I think probably the amount of expectation mismatch is happening in the marketplace. The market participants probably, I think, carried the viewpoint that I think year after year, some of the companies will continue to grow at an abnormally high rate of growth, which is not to be. And I think that is the reality which is checking in. Be it in the area of some of the defense companies, railway companies, or be it in the area of the EMS companies, which are basically manufacturing on consumer goods, electronics. Each one of them are probably finding themselves into a spot where probably on a higher base they are not growing as much as I think they used to grow in the previous period. And that is the reality which is checking in. That's where market is adjusting on the valuations. In previous quarter, the valuations were given on a high growth rate. Now, I think after factoring the high base rate, I think your valuations are likely to get moderated in coming times. So that is where you are likely to do the time correction in some of the stocks. Be it in the area of some of the highly and richly valued new age companies that we are talking about, or be it in the area of government PSUs, or for that matter, I think the other ones which I just spoke about, the defense and the railways. Everywhere, probably are going to see some amount of rationalization. I don't think there is a disappointment. I think analysts have been predicting well about the results. So by and large, the results have been coming in line with expectations of the analysts, save and except some percentage point here and there in some of the companies where they have announced the result. But that's not to be disappointed. I feel that I think one quarter or so, I think is not the judgment that one should be drawing. The full year outlook remains absolutely convincing for majority of the stocks, though on a restricted growth rate, not I think as much as we saw in the previous quarter as I explained.
Devin bhai, we've seen a sharp reduction in expectations of a rate cut in December from the Reserve Bank of India, given the strength of food inflation and consumer inflation number that came in earlier this week. In your estimate, what are the probabilities of having a rate cut sooner than later? And what would be your top play to look at a cut in interest rates on the Lal Street in terms of stock picking?
So I think few points in my observation. The seasonality factor also works in the area of food inflation, and that's what I think one has experienced in the previous quarter. Also, the fact that it with a higher amount of disposable income in hands of consumer and at the same time higher availability of credit is also affecting the consumption, and that is where probably the high amount of inflation can be explained. Now, whether the RBI should bring down the rate of interest sooner than later, answer should be yes. Reason, because government is spending big time money on building the infrastructure. If the rate of interest is not brought down, then quite possible that the kind of activity that one wants to see accelerating in the economy, particularly in private sector on the capex front, they might take a while before it moves up. So I guess I think the need to do is to bring down the rate of interest, let the consumption take its own course. Maybe inflation will come down eventually once we have a larger amount of production in place, which we are seeing the symptoms right now in most of the consumer companies. So we are not too much worried about it, and we rather would like to believe that it is time that we drive looking into the front screen instead of driving from the rear view mirror. As far as the economy is concerned, I think we predict inflation well. I think we bring down the rate of interest based on it. I think it's a cycle. If you bring it down, inflation will also come under control eventually.
Right. Deven sir,
good news in the market, ladies and gentlemen. The Nifty is now up 56 points as far as prices are concerned, and it's driven primarily by a very, very strong move coming into Reliance, 23 rupees higher, and perhaps, just perhaps, you may have seen the worst behind as far as Reliance is concerned. Let's hope it's that way. Infosys ahead of earnings, 15 rupees higher, 1935. Of course, it is consolidating near record highs. ICICI Bank, 6 rupees 30 higher. In fact, if you look at the top 10, only Axis Bank is in the red. ahead of its earnings, and HDFC Bank just 5 rupees lower, nothing to be worried about. Let's look at how the broader markets have performed in the pre-open trade. Nifty is now settled 56 points higher, 25,027. There is a green tick beginning on the IT index, 0.5% higher. The bank and the NSE 500 are also opening in the green. National Aluminium 2.6% higher, Emphasis post earnings 3.25% higher, and of course CRISIL 5.5% higher as far as prices are concerned. Sterling Wilson Solar, this is a stock that was recommended by one of our experts 2 days ago on the long side, and the company has just announced in its con call that it sticks to its annual sales guidance of about 8,000 crore rupees. The counter now at 636. Devin bhai, last question before we let you go. Your top preference in the pharma space?
Expensive. I think most of them are expensive. Honestly, I think I would have loved to put my bet on the likes of EVs and dollars, but I believe that I think they are already priced in most of the development at this point of time. So I would always say that I think it's time, maybe slightly cautious. Uh, I'm not saying that I think too much of a big fall in pharma, but if you end up getting, I think, DVs and dollars, I think about 5 to 7% lower than current price, that may make your margin of safety factor work better. That is what I would like to say. Long-term outlook doesn't change. Both these companies on the CDMO and the API business front have got a significantly large amount of pipeline in place now, with the higher production capacity already built in. And I think the offtake started from the contract customers. I believe that I think both these companies are relatively better off in current times. Of course, I think the big pharma companies like the Ciplas and the Sun Pharmas and the Dr. Reddy's, they are all thriving on their complex or specialty generic products, which they are systematically putting across into the US market and generating better margins without meeting too much of competition. So these companies looks relatively more safe from investment. But again, the prices have scaled up. Maybe some correction in price, margin of safety is better than re-enter into this stocks.
All right. Well, we will thank you, Devin sir, on that note for being with us and sharing all these wonderful insights like you always share with our viewers. Truly appreciate your time. Thank you so much. All right, viewers. So we have the pre-opening rates settled. 25,027. It's remarkably improved from what the opening tick was in pre-open. 56 points higher on the Nifty, and we are into the green. The Nifty Bank is also up about 48 points, 51,849 right now. Among the sectors, barring the realty, which is absolutely flat, and auto space, rest all of the sectors are indicating a positive start. IT seems to be in the thick of action, 0.5% higher. Metals, pharma, small caps, consumer durables. These are the pockets that seem to be in the thick of action. On the Nifty, you have Sun Pharma as the top mover in the pre-open trade, 1.3% higher in trade. Hindalco, Reliance Industries, Tata Motors, Infosys, Grasim. These are the top movers on the Nifty right now. Among the draggers, when you have some of the auto names like Eicher, Hero, Shriram Finance, also Britannia and BPCL, these are the stocks that seem to be on the back foot. But we'll see 3 minutes to go how the opening really takes place. We are now joined by Aditya Agrawal, Head of Derivatives and Technicals at Sanctum Wealth, to share with us his view on the markets as well as some of the key stocks that he's picked out. Good morning to you and warm welcome, Aditya. First up, your sense of how the Nifty will pan out on the expiry as far as the index is concerned, and apart from that, if you're looking at any two stock ideas.
I'm very good morning. Well, we see indices, we are not expecting a very big up move or down move. I am expecting more of range bound move. See, if we see broader view, Nifty has already Nifty has made a soft bottom, which is somewhere around 24,700. And if we see broad view, I'm expecting market to consolidate in this range of 24,700 to 25,300 for next few trading sessions before giving any kind of fresh breakout or breakdown. So this will be more of lackluster market indices per se. But yes, we feel will see we are seeing a lot of stock specific and sector specific move and very fast move we are seeing. So indices, Nifty per se, I'm not expecting a very big move. Today also, probably Nifty will trade in a range of 24,940 on lower side to 25,000, 60, 70 on higher side. This is a 120 points range in which markets are expected to trade. We have seen aggressive call lighting at 25, 100, 25, 200 strike option. So that will act as a very strong resistance zone. And if Nifty comes on those levels, that kind of move will be used by traders to book profit in long position. Similarly, at lower levels, we have seen put writing at 24,900. So that will be a very strong support zone. So today I'm expecting more of range bound session for Nifty. But yes, a lot of stocks are showing a lot of strength. Like if we see FMCG has seen a good correction in last few trading sessions. But now last 3-4 days, we are seeing some short covering sign in FMCG space. Particularly we see stock like Dabur. Stock corrected from 670 odd levels to 560 odd levels. It consolidated in those range. And yesterday we saw first sign of short covering. Stock shared almost 2.5-3% shares in open interest, and it has closed above its 200 days moving average. 200 days moving average. So in Dabur, I'm expecting a positive move from these levels. It can be bought at current levels with a target of 598 to 610. Stop loss will be placed on 564. Second stock will be Apollo Tyres. Means if we see Apollo Tyres also, this stock has not done anything for the last few days. It is trading in a range, found strong support around its 200 days moving average, which is somewhere in the range of 495, 500. And from those levels, we are seeing some sign of recovery in this stock also. So Apollo Tyres, I'm expecting that this stock will move towards 545, 550. At current levels also, it can be bought with a stop loss of 498.
Right, ladies and gentlemen, the prices are upon us. The Nifty opens in the green and the battle resumes at 25,000 for the supremacy on Dalal Street between bulls and bears. Nifty Bank, first day of a fresh weekly stance, 74 points higher, 51,891. The Nifty IT index is in the green, 0.4% higher. Let's drill down into the market performance and find out the winners and losers in the first 1 hour of trade. Take it from me, Reliance is headed higher, 1% up, 26.65, 27.34 on the price. Strong show on Infosys, 20 rupees higher, 19.40. Tata Motors, 6 rupees higher, 913. ICICI Bank is something to look forward to. It came under selling pressure yesterday. This is a reversal trade, 13 rupees higher, 12.56. Overall, out of the 10 super index heavyweights that we track for you, just 3 of them are in the red. A downtick on HDFC Bank, nothing to be worried about, 10 rupees lower. Axis Bank, 8.5 rupees lower, and Lever, 5 rupees lower. In terms of the most active noises that are being made in the market, well, a profit booking happening on Bajaj Auto, ladies and gentlemen, 7% lower. The second quarter profit was expected to be somewhere like 2,300 crore rupees. It's come at 2,005 crores. So maybe some disappointment and much needed profit booking on this fantastic stock, the top performer in the 2024 space for two-wheelers. Emphasis, earnings boy, 4% higher, 3,028. Profit booking continues on Bombay Stock Exchange, 1.2% lower. Angel Broking, 0.7% lower. Zomato, 1% lower, 271. Remember, I told you something about the Canadian pension fund. Those problems between the two countries, India and Canada, seem to be on the diplomatic front getting worse. Power Grid, 0.3% higher, 328. And you have amongst the top gainers, National Aluminium, 4% higher. L&T, please keep this counter also in the view, 1.2% higher, 35.75. Very good morning to you, Aditya. Reliance, everything is now behind us in terms of tepid second quarter earnings, and we are looking forward to the record date for the bonus readjustment. What are your charts on Reliance telling you? And of course, another one below 200 DMA, which is L&T.
Morning, Shail. Well, Reliance means if we see charts, the charts are weak. The stock has given a breakdown below 28.50, 28.40 levels. But yes, means on lower side, 26.50 is a support zone. stock is in oversold territory, so we can see a short covering pullback. But that short covering pullback will not be a very big one, probably towards 28.20, 28.40. These are the levels which stock can test, which is approximately 100 rupees upside from these levels. But if we see a larger degree chart, stock means overall stock is looking slightly weak, and I think this upside move will be used by traders to exit from long position and again go short. So in my view, if stock comes in the zone of 2800 to 2840 levels, that will be a good time to exit, at least from your trading long position, and means you can lighten the position. But if we see on the contrary, L&T has respected its strong support zone, which was of 3440, 3450 level. Yes, stock is trading below its 200 days moving average. That will be a little bit overhang on the counter. But structure-wise, if we see L&T looks better than Reliance. I think L&T has the probability to move toward 3750, 3800 levels in next few trading sessions. So L&T provides a good risk-reward ratio at current levels. One can initiate long positions or can accumulate slowly with a target of 3750 to 3800 levels. On lower side, means 3500 to 3480 will be a very strong support zone.
Okay, and the markets have turned extremely volatile just within few minutes. You can actually see the Nifty slip again below 25,000 mark, 14 point of a downtick on the Nifty right now. The sectors that have quickly given up some of the gains and extended losses are autos especially. Let's look at the auto index, 2.2% lower, largely to do with Bajaj Auto's fall of 7-8% right in the morning trade. And this is also to do with Bajaj Auto because Citi has given a sell rating on Bajaj Auto with a target price that they believe should be at 7,800. They believe Q2 marginally below estimates due to slight miss in ASPs and the gross margin. They also believe that while the management has expressed optimism on the company's E2-wheelers, CNG bike and the 3-wheeler segments, they are a tad bit surprised on the outlook on the festive demand, wherein management noted that the industry volumes are up only 1 to 2% versus last year. So that is one of the key triggers that's probably led to this sharp downtick on Bajaj Auto right now. So autos are down, realty index is down by 1%, consumer durables have slipped about 0.5% lower, FMCG about 0.4% down in trade. Even the banks are now down. The Nifty bank itself is flattish with a negative bias. Small caps and mid caps have also given up the gains. IT seems to be holding up about 0.6% higher. Metals, pharma, PSU banks. These are the pockets that are still holding their ground. Top movers on the Nifty, Hindalco, Infosys, L&T, Wipro, Sun Pharma, SBI. On the downside, you again have Bajaj Auto, Hero Moto, Eicher Motor, M&M, all the auto majors and even Maruti Suzuki that's now slipped into the red. Let's get back to Aditya. Aditya, safe zones for today. Would you stick with IT?
Well, IT is definitely one sector which is showing a lot of strength, means be it mid-cap IT or large-cap IT. Other than TCS, means most of the IT stocks have made a positive structure and they're in consolidation zone or they have given a positive breakout. Means stock like HCL Tech, means any dip in this counter is being used as a buying opportunity. Means from these levels also we are bullish on HCL Tech and we're expecting this stock can move towards 1950 to 2000 levels in next few trading sessions. So at this level also it's a good buy with a stop loss of 1810. One can buy HCL Tech with target of 1940, 1950 levels.
$921, ladies and gentlemen. As Sakshi pointed out to the volatility, the Nifty is back in the red. As I've mentioned, 24,950, 24,900 is the new battleground as far as bulls and bears are concerned. And of course, we'll have to give it to volatility on the day of the weekly expiry. But let's try and focus on stocks where you see strong momentum. And I believe today's candidate on the long side would be CAMS. This is the back end of the mutual fund business that manages all your SIPs, gives you an update of all your demat holdings and does a very fine job at no cost to the customer. So now at 49.10, CAMS is the back end ancillary, if I may say, to the entire mutual fund business. Aditya, your view on CAMS. Is this a momentum worth chasing? 4910, counter up 1.5.
Well, definitely means if we see camps, it was trading in a range for last couple of weeks now. 4650, 4700 was the resistance. Yesterday, stock gave up breakout above that. It closed above that. And today we are seeing a follow-up buying interest in camps. So structure-wise, stocks looks positive. I'm expecting that this stock may move towards 5150, 5200 levels. So at current levels, or if there's any dip also of 40, 50 rupees in this counter, stock comes in the zone of 48, 70, 48, 80 level, that will be a good buying opportunity. Means on higher side, easily we can we can see a 6 to 7% upside in this counter as per the chart patterns.
Yes, please remember that CAMS is a sheer monopoly. It controls 80% of the back end mutual fund technology business, which keeps you updated regularly on your purchases, and at a market capitalization of 24,000 crore rupees, zero debt, and the fact that you have the mutual fund industry expanding its reach fairly regularly, this is a stock that can be looked forward to. Unfortunately, in India, the problem is that any good stock at the moment has its valuation which is sky high. Sadly for us and long term players, they do not represent good entry points, but for traders and momentum chasers, they are great stocks to look at. If you can get the back end of the entire mutual fund industry at 24,000 crore rupees, that, ladies and gentlemen, is a steal. Nevertheless, please get an independent view from your own financial advisor. Sakshi.
Right. Let's again then look at some of the other pockets along with the CAMS. There are other broking houses, companies that are also continuing to do a strong showing even today. So, Geojit Financial Services, for instance, is up and about in trade. Several other stocks that are also buzzing. You have also the research agencies. So, CRISIL, remember we had pointed out earnings play. ICRA is also up and about in trade. So, some of these stocks are also, buzzing of late. What else is buzzing is the real estate players. Kolte Patil, that's one stock that we can look at. Remember, I talked about the Q2 update from the company. Collections up 16%, sales surging 22%. That has pulled up the stock almost 10.5% higher in the initial trade. Let's get in Aditya's view here. Aditya, Kolte Patil, for you, after this buzz, would you still be a buyer after that 10% surge? And overall on the real estate space also, what looks good to you?
Well, we are overall very bullish on real estate space. But yes, Kolte Patel, if you see, I won't be a buyer. This stock is relatively much weaker as compared to other real estate stocks. Yes, today means we have seen a pullback in this counter, but I don't think pullback is going to sustain above 450, 460 levels. The stock has a very strong resistance on those levels. And if a stock comes down those levels, I think that will be used as a pocket booking opportunity. But if we see other real estate space, like if we see DLF, Oberoi, Godrej, or Lodha, all these stocks are looking positively placed. Means if we see Oberoi, it has already made a new all-time high level in yesterday's session. Today, some profit booking is there, but overall structure is positive. Similarly, Godrej Properties and DLF are also showing positive traction. If I have to choose one stock, then I will choose Lodha from these stocks. The stock again, Lodha has not performed, but yes, on the lower side, the stock has a strong support in the zone of 1100, 1140 levels, and from those levels, we are seeing some sign of pullback in Lodha. So I'm expecting that Lodha can move toward 1300, 1360 levels in next few trading sessions. So we can see some 8 to 10% kind of up move in Lodha, and risk reward wise also Lodha provides a good opportunity with a stop loss of 1140. One can buy for target of 1340 to 1360 levels.
Okay, Lodha, along with the other real estate plays such as Oberoi Realty, such as Suntech Realty, Prestige, as also Shobha Developers, is one of the many interest rate related plays that we are seeing doing pretty well in the market. Let's look at Emphasis. This is a stock which is running after its earnings have been announced, and you have a sharp flow in terms of volume already. About 212 crores worth of shares of Emphasis have been traded, and as Sakshi has pointed out, there is a breakout in CRISIL, up 6% post the earnings, with CRISIL showing signs of an all-time high. Yes, this is an all-time high that I see in front of me. The last time we saw this price was in Jan 1, 2024. Please, Aditya, take a look at ICRA. The earnings are still due, but the run-up on the stock has started. It's made a fresh high, 7,500 for you on the charts, up 8%. We won't chase the momentum, but of course this is something to look forward to. For ICRA, the volumes are pretty good, and this is something that should catch Aditya's eye. Your views?
Well, definitely, stock structure is quite positive. Means after the consolidation of last few days, stock has given a fresh breakout. But stock is up 8% today. Means it has already seen a big move. So I will wait for some dip. If it comes from 7,300, 7,340 levels, that is a good entry point. But at current levels, entry point is not very attractive because risk reward ratio will not be favorable. On higher side, stock has a potential to move towards 7,900 to 8,000 levels. But I will wait for some dip for the stock to buy. If it comes in the zone of 7,300, 7,340 level, very attractive level to enter. Overall structure-wise, stock is quite positive. On higher side, if you are holding, you can continue to hold with target of 7,900 to 8,000.
Okay. So that's as far as ICRA is concerned. Let me draw your attention to the auto ancillaries pack. While the auto space is, in sharp downtrend today, and 2.2% of a fall on the Nifty auto, some of the auto ancillary stocks are still buzzing in trade. Stocks like Precision Camshafts that we had also pointed out yesterday. It's a second day in a row that the stock is now up about 7% right now, and several other stocks are also moving up. Omax Auto, Shivam Auto Tech. There have been several other stocks as well that have been in the thick of action all through yesterday too. Munjal Showa, Gabriel. All of these stocks are again moving up. Precision Camshafts for you particularly. How are you looking at this momentum that's been generated in the last 2 or 3 odd sessions, Aditya? Will this continue?
The stock has already seen a big move in this week. Means it is up by almost 36% in last 4 trading sessions. Definitely, stock has given a very solid breakout above 280, 285 levels. So structure-wise, stock is positive. If someone wants to hold for slightly longer perspective, I am expecting target of 385 to 400 level, but not for short-term traders, as stock is already there by 35%. If there's some dip, stock comes in the zone of 280, 285 level, that's a good time to enter for short-term positions. As of now, for short-term traders, I will avoid this counter. But yes, if someone is holding in their portfolio, they can continue to hold with target of 385 to 400 levels.
Okay, ladies and gentlemen, the first 15 minutes have elapsed on the Nifty. You have 24,937 on its weekly expiry day, the index on the back foot. Let us look at the stocks that are helping the Nifty on its way up. Infosys ahead of earnings, 25 points on the green. Reliance, 13 points on the green. SBI and ICICI Bank and L&T. So, ladies and gentlemen, I won't be much worried about as far as the Nifty is concerned. The main drawback is coming from Bajaj Auto, 7% lower. It's contributing a negative 29 points to Nifty's total, and of course HDFC Bank and Axis Bank. HDFC Bank is down marginally, 0.7%. We'll wait for the first 1 hour of trade, and probably you will see strong support getting built into 24,900, 24,950 in the initial part of trade. If Infosys, Reliance and ICICI Bank are in the green, there is little to be worried about as far as prices are concerned on the index. But one mid-cap stock in the real estate space that is doing very well is Kolte Patil Developers. This is a Pune-based real estate company, and it's had a blowout on price and volume. This is possibly the first day of the move, yes, and it is facing resistance at 200-day DMA. Aditya, what are the chances that you will see Kolte Patil doing better over the next 2 or 3 days? The volume in the first 15 minutes is the highest since 10th of April. Your view on Kolte?
Well, I mean, Shall, as I said, means stock has today means it has underperformed the whole real estate pack. Means we are seeing a pullback in this counter, but crossing 450, 460 will be a big task. If it breaks 460 and sustains above that, then we can see a overall trend reversal in the stock. In that case, it may move towards 540 to 580 also, but that will take some time. So for the time being, I will avoid this stock. Let the stock close above 460 for 1 or 2 days. Then we can see a whole trend reversal in the stock. In that case, it may move towards 540, 560. But that will take some couple of weeks. It will be not a very short term move. It will take a couple of weeks for this move to happen.
Okay, the metals pack we haven't discussed with you, Aditya. So the metals move is also strengthening with some of the counters like Nalco buzzing in the F&O space as the top movers. You have Hindalco, which has been continuously in the thick of action last few days too. How are you looking at the metal story unfold, and what would you say on Nalco, which has already had a good run up when the metals pack was shining? Does it still have the strength to go up further from the current levels?
Well, yes, means if we see whole metal pack, National Aluminium is one stock which is the strongest stock, and any decline in this stock is being used as a buying opportunity. Means stock is consolidation for last few days in the range of 230 and 210, but structure-wise stock is good. We are seeing any dip in this counter is used is used to add fresh long position. So I am expecting that this stock may move towards 255, 260 levels in next few trading sessions. So at current levels, also after today's move, also it's a good buying opportunity for target of 245. 250 in short term, and 260 will be slightly medium term targets. But if we see other metal stock, like it means if we see steel stocks, they are not looking very attractive. Like Tata Steel, Steel Authority of India, both these stocks are slightly weak, and we are seeing some short position getting built up in these counters. So in metals, we have to very stock specific. National Aluminium, Hindalco looks positive, but at the same time, steels look weak, and Tata Steel and SAIL kind of stocks can be avoided at the current levels.
Okay, as good a time as any to look at record highs. You have fluorochemicals. This is Gujarat Fluorochemicals, 1.8% higher, 4760. From the capital goods engineering space, you have Elecon Engineering doing very well, 728. Remember, this is a split of 1:1. Therefore, the effective price is 1450 for you as far as Elecon is concerned. I marked Oberoi Realty earlier. A fresh move above 2000 starts, and it's a new orbit in which the share is. GETND, this is the transmission and distribution business of GE in India. 1900 rupees, down 2%, but still a record high. The market showing some profit booking on this counter. Remember, just 3-4 weeks ago, the parent had sold an 11% stake in this Indian subsidiary to take advantage of sky high prices which the counter has experienced over the last 2.5 years. It's a multi-bagger in its own right. Volume buzzers with gain. There is a move that is coming on RVNL, 6% higher. This is the second day of gains. Aditya, your view on RVNL, 509, and already 100% of 5-day volume is traded. What are the charts telling you?
Well, charts are showing some sign of reversal in this stock. Means the stock has been in downtrend from 650 levels to 420 odd levels. Stock has corrected, and now we are seeing some sign of reversal in this stock. It has a small resistance in the zone of 510, 515. If it breaks 515, then the stock can move towards 555 to 560 levels. So at current levels, also it's a good buy. Means it will take some time, but overall structure is positive. I am not expecting a very big downside in this counter. So one can start accumulating RBNL at current levels for target of 555 to 560 levels.
Okay. Market breadth is further weakening. We have seen 24,900 being breached on the downside now, 24,892, 77 points of a fall on the Nifty. That's a 0.3% of a cut. The only three sectors that continue to hover in the green are IT, PSU banks, and the pharma index as well. PSU banks for you. Of course, this is one of the spaces that has been long forgotten because it was in the thickest of action when the PSU rally was unfolding. But in the run up to the budget, elections, and post all of those mega events, these spaces have just not performed. PSU banks, do you think there is enough and more opportunity for one to continue to accumulate, if not all, at least one or two leaders?
Well, yes, means I agree with that. Means in PSU banks we can see some traction, but not in all the stocks. Like if I have to go, I will go with SBI. Means stock is trading in a range for last couple of weeks now. On lower side, it found strong support around 760, 775 level, which was also a 200 days moving average. And then we are seeing some sign of recovery in this stock. It will take some time. It is in consolidation zone, but I'm expecting that SBI can move towards 855, 860 levels in the next few days. Risk reward ratio is clearly in favor of buyers. I am not expecting stock to correct below 795 levels. So at current levels, it's a good buy with a good risk reward ratio with for target of 855, 860 with a stop loss of 794.
Ladies and gentlemen, name a stock in the jewelry space which is at a 5% upper circuit. It's a stock that I generally don't talk about, but gives you a first hint of Tezi. PC Jewelers, 5% up at 186. Let's look at TBZ. This is Tribhuvan Das Brimji Javeri. Nothing happening. 4 rupees lower at 129. This is the gold space that will come back into action. Senco Gold taking rest at 200 at 21 EMA. And of course, let's look at Thanga Mile Jewelry. This is flat as flat can be for the last 4 or 5 sessions, 25.43. Just in the middle of September, they had a huge block deal at about 1750, 1800 rupees. And that is the price at which a lot of good smart people came in. I'll also request the PCR to fire a chart of Titagarh Wagons. This is a large block deal that happened yesterday on the counter. Small World Fund has sold, I believe, 7 lakh shares, which has been purchased by Morgan Stanley. Please keep Titagarh Wagons on your radar. Better things are expected. Again, this is the entire railway space which is coming back into action after about 4-5 months of complete rest. Now look at the stocks that are on circuit and the ones that are doing very well. There is a company called Hirect, which is Hind Rectifier. Circuit 10% higher. RVNL we've just discussed, 5.6% higher. Kernex Microsystems, the company that meets anti-collision devices, up 5%, 832. Titagarh I have just marked. Ircon, Texrail, Ircon and Rights are also doing pretty well. Aditya, to you, Titagarh Wagons, after the company has corrected about 30-35%, and ditto Texrail, 214. What are these two charts telling you?
Well, I mean, in Titagarh Wagon, we can see a short covering move, but not a very quick move. Means on the higher side, means 1220, 1240 is a very strong resistance for this stock. So we can see another 3 to 4 to 5% kind of up move in this counter, but around 1200, 1220, I am expecting rally to fizzle out, this up move to fizzle out. And again, stock may go in some consolidation zone. So stock is in downtrend for the time being. So it need to make a strong base first, and then only we can expect a big up move. So for the time being, I'm expecting more of range bound move in this counter. Probably 4 to 5% upside can happen. But again, around 1200, 1220, if someone is holding a position, then they can look to book profit around those levels, as that is a strong 200 days moving average resistance will be there. Sorry, which was the another stock?
Texrail.
Yes. Well, text macro charts are comparatively better than the Titagar. Means in this stock, we can expect a bigger up move, probably towards 240 to 255 levels. This stock can move. A stock has made a small base in the zone of 180, 195 levels, and then it has given a fresh up move. Already means we have seen a good reversal from the oversold territory. So in this stock, still a 10 to 15% upside is there. At current levels, it is giving a good buying opportunity with a stop loss of 203. One can buy at current levels. On higher side, my first target will be 230, 235. If that is taken out, then 245 will be the next possible target.
Okay, 9:43, and you can actually see the market slipping even further. 120 points now down on the Nifty. 24,850 has been tested as well. On the lower side, the Nifty Bank has lost about 0.5% too. About 286 points gone there. 51,509 odd levels is where we are at this point in time. So it's definitely seeing some more weakness unfold. IT now, the only index that holds itself into the green. Rest all of the sectors have slipped below, and that's a weakening space that we are seeing. Like I had pointed out initially with you, Aditya, IT the only safe space to be probably. How about the mid-cap IT names? Where are you finding that investors can continue to place their bets, even though some of the earnings are still likely to be coming out over the next 1 week, 10 days odd? How would you really look at the mid-cap IT space particularly?
Well, overall IT pack looks good. Means be it large cap or mid cap. If I have to go with some of the mid cap counters, then emphasis is on stock, which is looking quite good. Means stock is in consolidation zone. It is consolidating between 2,800 to 3,000 levels. But once that 3,000 levels is taken out convincingly, then stock can move towards 3,250, 3,300 levels also in a very short span of time. So overall structure for emphasis looks good, and it can be bought at any decline or at current levels also. Similarly, persistent is another stock which can be bought. Yesterday, stock made all-time high. Today, we are seeing a minor sign of profit booking, but overall structure is positive. At current levels, or if it stock corrects by another 40, 50 rupees, it's good, a good buying opportunity. In this stock, we are expecting target of 5,800 to 5,850 levels in short term. So both this emphasis and persistent look good, good from a medium-term perspective among mid-cap IT counters.
Okay, Hind rectifier is something that I would like to mark for now two reasons. One is, of course, the 10% circuit that I told you, but it's the deep volume that is coming in, and the breakout that has started with a sectoral tailwind. Normally, we don't discuss this counter because it is little tracked, but in terms of fundamentals, it's a superb stock to look at. July last year, it was at 300 rupees, and in October this year, in a span of 15 months, you have a 5x, my apologies, a 4x that has come in. The intraday high was 1067. Now we are at 1037. Very strong volume show, and of course the second day of a continuous rally. Chennai Petro and MRPL are the two other stocks that are showing signs of good activity on the long side. Aditya, CHPC or MRPL, both very high beta counters. What are the charts of Chennai Petroleum telling you, as also MRPL?
Well, means it looks like that Chennai Petroleum has made a bottom around 850, 860 odd levels. The last 2 days, stock has seen a good volume activity as well as price activity. It may find some resistance in the zone of 1,040, 1,050, but once that is taken out, I am expecting stock to move towards its previous high of 1,200, 1,250. So structure-wise, quite positive. The stock has respected its support zone of 850. So structure means we are bullish on this count. I'm expecting this stock is moving towards 1,200 to 1,250 levels in next few trading weeks. MRPL means if we see stock is in downtrend, means from the highs of 285, 290, stock has corrected till 170 levels. Still, stock need to make some base first, then we will see some meaningful pullback. Means we can see some short covering as the stock is in oversold zone. So it may move towards 190, 195 levels in short term. But if we are expecting a target of 210 to 20, then stock will take a lot of time. It will make some base first, then we will see some kind of positive traction. But yes, means in MRPL also from these levels, target means we can expect move towards 190, 195, but not beyond that.
Okay. Let's keep attention on the auto space. It's now further slipping lower, almost a 3% dip on the Nifty auto index alone. Bajaj Auto is now down over 9%. TVS down over 5. Hero Moto down about 5%. Eicher down 3. M&M down 2.5. Maruti down 2, and all the other stocks are also now trending down, be it the frontline auto majors or even some of the major auto ancillary pack stocks as well. Of course, there is this muted festive demand that is probably one of the biggest reasons why we are seeing auto space as a whole, in the slow lane right now, Aditya. But would you be enthused to buy some of the stocks in these dips within the auto pack?
Well, a couple of four-wheeler stocks looks good, like Mahindra and Mahindra. Means this stock has been outperforming the whole auto pack for last couple of months now. Yes, means we are seeing some pressure for last 3-4 trading sessions. Stock may see some motive. It may come towards 2900, 2850 odd levels. But around those levels, stock gives a very good buying opportunity. So if I have to buy any stock from four-wheeler, then Mahindra and Mahindra will be one stock. But not at current levels. I will wait for another 100, 150 rupees correction. Around 2850, 2900 levels, we are a buyer. I'm expecting again it may move toward 3250 to 3300 levels in short span of time. But if you see two-wheelers, still two-wheelers are looking slightly weak. After today's correction, means most of these stocks have given a negative breakdown, be it Bajaj Auto, TVS or Hero Motors. So I will wait for in two-wheelers for some more time. Let the stock correct, make some base and show some sign of reversal. But four-wheelers, Mahindra and Mahindra looks good.
Fair point. 950, ladies and gentlemen. Now it's more or less given that 24,700 or thereabouts will be tested. This is a slow degradation of bulls that is happening on the Nifty, whether it is the weekly expiry or whether it is the inability to hold on to 25,000 or 24,900. Shortly 24,800 will also be tested, and on the monthly options charts you will see a lot of put support getting sort of vacated by the bulls at around 24,800. So in the last 2 days what has happened is that 24,200, 25,100, 25,000 and 24,900 has been given up by the bulls, and this is where a lot of selling pressure is getting built up, and a lot of charts are now getting a bit dissociated on the long side. Let's look at the advanced decline ratio within the Nifty. 37 stocks are in the red versus just 12 in the green. We will also look at the advanced decline ratio in the FNO space. That's a little difficult to get hold of immediately, but let me just try. The FNO space is also abuzz with losses. One moment please. Let's look at the top gainers. What is the list? So it's about 25 shares stock futures in the green, and therefore about 140 in the red. So 1:7 kind of an advanced decline ratio favoring bears as of now, and in the overall market just 650 stocks are in the green compared with 1618 that are in the red. Sakshi.
Okay, got that. So that's as far as the market setup continues to be now. 140 points lower on the Nifty, 24,828 now. Aditya, let me just ask you on the overall markets. the lack of strength that there is. What is the ideal strategy that you would recommend traders at this point in time? Both the Nifty and the Nifty Bank are actually slipping, falling like 9 pins. How are you really looking at this current weakening setup now?
Well, I think today's selling pressure will be more because of the weekly expiry also. And now, a major crucial support zone for Nifty is 24,700. If Nifty breaks 24,700 and sustains below that, then we can see a fresh leg of sell-off in the market, which may drag Nifty towards 24,200 to 24,000 levels also in next few trading weeks. But yes, as of now, 24,700 remains a very strong support zone for Nifty. So I would like to take a contra call at these levels. I would like to buy Nifty at current levels. We keeping a stop loss below 24,700. On higher side, upside will be not much, probably towards 25,100, 25,250. That is a possible target which we can see in next few days. So at this level, I will take a contra call on Nifty and initiate a fresh long positions. Similarly, we see Bank Nifty also means Bank Nifty will find strong support in the zone of 51,000 levels, where we have seen some put writing also, and there the trendline support zone is also there. So in Bank Nifty also another 150 points correction. It will be a good buying opportunity. Take a contra call, keep a stop loss of 50,800. On higher side, 51,800 to 52,000 will be the possible targets.
Okay, got it. Let me just ask you also on the pharma space, since there is some momentum on some of the leading pharma names like Dr. Reddy's, which is up 1%, Sun Pharma, that's also pulling up in trade. Since we are talking about IT, do you think the other defensive sector, pharma, also will be a safe haven?
Well, yes, but we have to very stock specific at these levels. Means if we see all the pharma stocks are not showing that kind of strength. Dr. Reddy is one stock which has already seen a correction from 7,100. It corrected till 6,400 levels, and after making a base formation, now we are seeing some fresh long position getting built up. Yesterday we saw some short covering. Today again a follow up short covering is there in Dr. Reddy. So Dr. Reddy is one stock which can be kept under radar in pharma space. It may move towards 7,000 to 7,100 levels in next few days. So this reward ratio wise also it's a good, a good stock with a stop loss of 6,600. One can expect target of 7,100. But if we see similarly Lupin is looking slightly weak. So that's why I'm saying we have to take a stock specific approach in pharma also rather than taking a whole sector specific approach.
Okay, ladies and gentlemen, there is a very sharp breakdown that is happening in Bajaj Auto. Now, I think the counter's down almost 10%, 9% to be sure, and very heavy volumes are seen. 1,065 crores on Bajaj Auto on the first half an hour, 40 minutes of trade, and this is now testing the 100-day exponential moving average. You are already at its lowest since August of 2024. So this is almost September, October. A 3-month low, 2-month low definitely. The all-time high that we've seen is 12,774 on 27th of September. Very sharp and quick bout of profit booking that is happening on Bajaj Auto. We'll wait for the poison to be let out and then probably examine this stock after 3-4 days. What is in good shape apart from Bajaj Auto? There is profit booking happening in Hero Motors as well, 4.4% lower, 5160. Tata Motors heading towards 900, now 0.5% lower. Maruti 2 percentage points lower, 12,140. And of course, there is a bit of a weakness coming in TVS Motors also, 5.5% lower at 2621. So the complexion of the space has changed in the two-wheeler segment post Bajaj Autos. Now we can definitely say dismal second quarter performance. Sakshi.
Okay, it's 9:56. I think we will start wrapping up now the morning edition. Aditya, anything else that's caught your attention where we haven't asked you anything before we let you go that you'd like to suggest, both maybe either on the long or the short side?
Well, from pharma space, I think Cipla is one stock which can be kept on the radar for today's trading session. I mean, the stock has seen a correction in last 3-4 days, but now again we are seeing some sign of recovery in Cipla today. So Cipla, I'm expecting that it can move towards 620, 625 levels in next 1 or 2 trading sessions. So it can be bought to, at current levels with today's low as a stop loss, which will be around 1620. 1560, and on higher side 1620, 1630 will be the next target.
Well, thank you so much, Aditya, for being with us on this edition and helping our viewers sail through this difficult morning hour and helping them with strategies on various sectors and stocks right there. Thank you so much. Appreciate your time with us on Business Today Television. Viewers, it's the Nifty Bank that's now pulling even lower. 0.7% of a decline can be seen, 370 points gone right there. So that's the weaker index out of the two major ones. The Nifty itself is down by about 0.5% now at 24,842 odd levels. That's a dip of almost 130 odd points. Barring the IT, all the sectors are down in the red. Deep cuts on autos, specifically led by Bajaj Auto, that's now down by over 9%. Real estate has also lost a lot of ground, about 2.5% of a fall for this index as well. The Nifty next 50 is down 1.5%. The broader markets, both mid and small caps, have fallen over 0.5% each. Private banks, financial services, PSU banks, they're all now down in trade, and it's a broad-based sell-off that you're looking at into the markets. The stocks that are holding up in this week's setup are clearly the IT space and some pharma leaders. Infosys, top mover, 1.6% higher. Dr. Reddy's 0.8% up. Cipla up by 1%, something that Aditya just highlighted. Hindalco, Tech Mahindra and Reliance Industries are stemming the fall at this point in time, but we'll have to see how much this extends going further. Bajaj Auto is the top loser, 9.9% now down in trade. Hero Moto, M&M, Eicher, Maruti. The top 4 losers on the Nifty are from the auto space. Shriram Finance and Trent are the other big laggards at this point in time. F&O space, you have Nalco, Emphasis, Infosys and Hindalco as among the top performers. On the downside, you have sharp cuts again on Bajaj Auto. In the F&O space, it's down 10%. TVS Motors, Hero Moto, BHEL and Bosch are the other stocks that are dragging in trade as of now. What we'll do is we'll wrap up the trade now in the morning edition of Market Today on Business Today Television. 135 points now. It's not a very good start. We'll see how it pans out. It's the Nifty expiry, and we'll continue to track the market momentum and all the news flows that are impacting the markets too. So stay tuned with us on Business Today Television. Many thanks for joining in.
Good afternoon, ladies and gentlemen. Welcome to Market Today. In our special coverage on top IPOs, we are now joined by the management of Vari Energies Limited, Mr. Hitesh Chimanlal Doshi, Chairman and Managing Director